In this video, we will be reviewing the 2022 real estate forecast for Riverside County market. My name is Tom Olsewski and I'm the team lead at Team Olsewski with Coldwell Banker. So the shock of going into a pandemic may have disrupted the housing market in 2020 for a few months, but there was no disruption in 2021. Demand surged despite COVID's winter wave, summer Delta wave, and the current Omicron wave. If anything, it has kept a lid on mortgage rates, which is a good thing. The only thing that will slow the speeding housing freight train at this point is rising interest rates. Yet, as long as COVID continues to be a threat, rates will have a hard time rising much from their current record lows. Housing is one of the strongest sectors of the economy, yet the overall U.S. economy has been on the mend as well. Retail sales have soared, unemployment has dropped substantially, job openings are surging. The number of homeowners in forbearance has actually dropped below 600,000 by the end of December. And the vast majority of the nearly 7 million exits are either performing or paid off their mortgages in full. The economy has dramatically improved. Inflation may have risen to highs not seen in decades, but mortgage rates have not budged, indicating that investors are confident that the inflation pressures will subside and eventually retract sometime in 2022. The low interest rate environment will continue and will be a tailwind that will continue to fuel the incredible run on housing. As a result, the local housing market is going to be hot in 2022. Here is the forecast. So let's look at active inventory. The year began with less than 2,200 homes, the lowest start by far since tracking began in 2004. It's 30% less than the 3,161 start to 2021, the prior record low. With very few available homes to purchase, housing will be extremely hot on January 1st. The theme for 2022 will be the same as 2021. Not enough homes for buyers to purchase. Instead, they will be all in escrow. Expect the active inventory to peak around October, eclipsing 4,000 homes. Again, well below over 10,000 home peak prior to COVID. Demand. With an anemic inventory in the historically low mortgage rate environment, buyer demand will be extremely strong from the start of the year through the summer market. With tremendous buyer competition, buyers will be willing to stretch above the asking price, so expect appreciation around 8 to 10% for the year. Demand will be at its strongest and most appreciation will occur from January through July, and then will downshift during the autumn and holiday markets in 2022. Housing cycle. The housing market will follow a normal housing cycle. The strongest demand, coupled with plenty of fresh inventory, will occur during the spring market, typically in May. This will be followed by slightly less demand and continued new supply of homes in the summer market. From there, demand will drop further, along with fewer homes entering the fray in the autumn market. Finally, all the distractions of the holiday market will be punctuated with the lowest demand of the year and few homeowners opting to sell. Let's look at closed sales. The number of successful closed sales will decrease 3 to 6% compared to 2021, with around 39,000. 2021 had the most sales since 2005, and this is in Riverside County that we're talking. The luxury market. Luxury housing will continue to be exceptionally hot, yet sales will drop slightly from 2021's record year. The spring market will be the strongest for luxury and will become a bit more sluggish with more Wall Street volatility during the second half of the year. So most important, interest rates Look for mortgage rates to continue to remain at historically low levels until the pandemic improves dramatically, most likely during the second half of the year. Yet rates will have a hard time surpassing 3.5%, even with the Federal Reserve reversing their mortgage-backed securities purchases and raising the federal funds rate, this is the short-term rates, and heightened inflation. Long-term mortgage rates will continue to bounce between 2.75% to 3.5%. If mortgage rates remain at these low levels, housing will be insane. Distressed inventory, foreclosures, short sales. We do not expect a wave of foreclosures. The number of active forbearances will dwindle to nearly none. As home values have surged, very few homeowners are underwater, which is one of the main reasons the vast majority of forbearance exits are either performing on a monthly basis or paid off their loans. The foreclosure moratorium resulted in very few foreclosures in 2021, so expect slightly more in 2022. Nonetheless, the total numbers will be very low and undetectable in the broader housing market. So, the bottom line, 2022 will continue where housing in 2021 left off. Insanely hot! It will be an insane seller's market. An expected market time below 40 days from the start of the year through the summer market. Multiple offers and bidding wars will be the norm for homes priced below $1 million. Once again, the market will heavily favor sellers, and buyers will have to pack their patience to isolate their piece of the American dream and take advantage of record low mortgage rates. From mid-August on, the beginning of autumn market, housing will evolve into a hot seller's market, an expected market time between 40 and 60 days. With a bit less activity, not quite as many multiple offers, and fewer homes selling above their asking prices. So that's what the experts are saying. We will see this coming year. Thanks and Happy New Year. This is Tom Olsewski with Team Olsewski signing out. Remember, it's important who you work with.